Thursday. Welcome to the Thursday Theatre of Thoughtfulness. And called that because we have quizzed after we try and find you some trades or talk about the trades that you've been in. If you're willing to share, we're certainly willing to share ours. That's what Trading Buddies is all about. We like to share opinions. We like to share our trades. We like to share our thoughts on what the market is doing, has done, likely to do, all those sorts of things. So feel free to jump in anytime you wish. There's a chat box there for you. You can also come and join us in the room via microphone and camera if you want to. If you want to improve the scenery, then please feel free to do that. All right, as usual, and welcome to those first timers who are with us. Great to have you on board. Let's hope you get something from the show. And in the next hour and 15 minutes or so, we'll endeavour to show you just a little bit of what we do and how we do it, and hopefully get into some money as well, if the market is friendly enough. Happy Thursday to you too, Paul P. Good to have you here as always. All right, first things first, what we do on a pre-London Open is take a look at pound versus the US dollar on the hourly chart. That's exactly what I'm doing here. And the reason we do this is so we can estimate whether a breakout is going to be worthy of our attention. A breakout from the range of the previous day, which is the low of which is here, high of which is here, and the current, high of which is here, and the current actually there, and the day's trading high of which is here. So the effective range here is from there to there. Now, what I then work out is, do we have enough reward available to us before we hit a support or resistance level to facilitate us making money? So we measure the risk to start with. The risk, of course, is the difference between the high and the low, and that would be 117 pips. So what I've got to really work out is, can I get some reasonable profit? And I'm looking for 1-to-1 to take our first profit, right? If I were to enter short here underneath this bar and take a 117 pip risk, then what I would be looking at is trading about 3 pips below that, actually 120 pips. I'd be trading into that low with about 1/3 of my risk available to take profit at. Not that I actually take profit at. What I do at that point is move my stops to entry. Look, I don't think that's good enough, frankly. I think it's too risky to take. So for that reason, I wouldn't be looking to trade the breakout short. Would I be looking to trade it long is the next question. And answer is 117 gets me about 90. That's not too bad. That one to the high side. You've got to get through DR1. You've got to get through DR2. Last week's weekly pivot. I don't see any open water here. So for mine, and we have gone into trend by the look of it, and potential reversal. You've got a clear head and shoulders here. You've had a break of that neckline, a retest of that neckline. And since then, we've had higher highs, higher lows, higher highs, higher lows, etc., etc. If I'm going to analyze this and look to trade it myself without the breakout in mind, I would be looking probably at this level or very, very close to where we have our high of today, because it has been historically a level of resistance, as you can clearly see. Broken, of course, but now we're back there. I would expect the first attempt to crack that would be unsuccessful. So I'd be looking for either a bounce off this level, maybe back to the pivots, or a break, then price come back inside, and again, go back to the pivots. So if I was to look to trade that, I'd be looking for a lower high in here on both the bounce and the false break. So that would be my analysis for this chart. Does look very much, however, like this is off and running And I do like the fact that that inverted head and shoulders there has been followed up by a clear higher low now. So I think it's a case of buy the dips, and the dip, in my opinion, is probably the better way to look at today. Back to the pivots and then go. That's what I'd have in my head. That's what I do have in my head. G'day, Lewis. How you doing, bud? Okay, so that's no trade for the pound versus the US dollar on the breakout. London has now just opened, and I have a few things that I need to discuss with you. Not least of which is, I think I'm probably just now out of euro dollar. Oh, it's so close. Got so close. Now, I should already be out of euro dollar because I started trailing my stops by 2 1-hourly bars. Once I moved my stop loss to here. Now that represents, we entered here, we had 20 pips of risk. That represented almost 12 to 1 on our risk. And I'm satisfied with that. Of course, you would need to be satisfied with that, but there's still the opportunity, I believe, for this to continue going short. My stop is now very, very tight, as I've shown you, and at nearly 12 to 1 risk. I think if I do get taken out here, I'm not going to be too dissatisfied. But I do see a potential bear flag sitting here. We're right at the top of that. Untested daily pivot below us, smaller time frames would lead me to think a false break of this level or a false break of this trade line could indeed lead to further downside. So I'll be watching that on 30-minute charts. And if I do get taken out, I have no problem getting back in. We've got a fair bit of cash to play with on that trade. So that's the euro dollar updates. That's the only trade I'm in at the moment. That's not, well, I do have an order in the market, and it is dollar versus Sing short. Now, the reason I have chosen dollar versus the Sing is I do think, if we have a look at the dollar index, I'll probably give you a better idea of why I'm just a little bit on the bearish side for the dollar. And it's because we come back to this long-term trend line, if you like, which on the monthly chart is there. Now, it has been false broken once before. There's a massive confluence area here that I'm really concentrating on with this pair. And I hate, sorry, not this pair, with this index. It does look like there's a false break of this support trade line, but it also could be quite the opposite in a bounce off this trend line. So it's far from clear, but the reason I'm so interested in this is because when you've got a strong confluence area like that, it generally leads to a big burst of power. So I'll be watching this very, very closely. I'm on a monthly chart here, right? And we may be here next April talking about this same level. In the meantime, it could go up here, could go down here. I've got no idea. But this is very, very interesting to me. I think it's a great inflection point, and I will be keeping my eye on it. So bringing that back to today, we do have a resistance trade line here. We do have a wedge forming, obviously, where we're getting lower highs and higher lows. It's all over the place. I think this is a bounce point. We do have, called a triple top if you want. This potentially is a lower high on those, and the trade line suggests to me that we may get some downside. Got the weekly pivot and the monthly pivot sitting there as well. We've already tested the daily, so I'm on the side of the Singapore dollar over the dollar today. That's kind of where I want to leave it for now, because I want to bring Ash in. G'day, buddy.
Hello, mate. How's things with you?
Look, I'm a bit weary. I've been on the road again.
On the road again, yeah.
I can hardly hear you. Is your microphone somewhere that it shouldn't be?
Oh, no, it should be in the same place.
Is it just me?
It might be. Can anybody else hear me all right? Hey, Lewis.
Lewis, can you hear Ash as you would normally hear him? Is it just my that's playing?
Everybody hear me okay?
Oh, yeah, my level might be right now. There you go.
Oh, is that better?
Now
Okay.
I can hear. Yeah. I
Yeah.
can just slide the slider. What's going on? I've missed everything because I've been driving in my car. I'm sick of that white line, man.
Well, do you know, mate? It's in a way you've missed lots, and in another way you've missed nothing. I think. Do you want me to have a look at some charts and we'll discuss
please do. Tell
some
me
of the
what's
things
been
that
going on. I see there's
Well,
been some good numbers for the dollar. I see there's been some bad numbers for CAD, I think it was.
Yeah, let's have a look at those. Where are we going here? My computer keeps crashing, so I'm trying a different search engine to see if it'll make any difference. I think it's on its way out.
Well,
finally on its way out.
Which is what's on its way out?
My PC.
Oh, okay.
Which I will really miss. You know, I don't know whether you can get attached to technology, but I've been with this PC since nearly the start of my trading kind of journey. You know, when I kind of made the jump to go pro. Yeah, I mean, it's lasted ages. It's lasted such a long time. So nearly since the start of my journey. It's probably at least maybe sort of 13 years, maybe. It's lasted. Crikey. So it's a cracking piece of kit, but you know, it is old now. Okay, so let's have a look.
Old in IT terms. That's old.
Yeah, it's old, isn't it? So I mean, it was a you know, I spent the money to get it kind of personally made for me, and I've lost contact with the guy. So now, and I really trusted him. So now I don't know. I'm gonna probably have to go and buy one off the shelf, and I don't know whether I trust it so much. It probably won't last another 15 years. But anyway,
get Lloyd to build you one. He'll build you one in 5 minutes.
Oh, you reckon?
Yeah, there's nothing he can't do.
This is true. Okay, so Footsie. Let's start with the Footsie because the Footsie really did react well to these levels up here. You know, I talked about these levels for quite some time, and it got caged in here, and it has reacted there, and it's started to come down. I mean, there was a few levels that suggested that confluence zone on the Footsie when you come down and have a look at the this primary trend. So I mean, you see that on a weekly, but actually the primary trend's there as well, and we're seeing the Footsie weaken currently down here. Now, the first thing to note really with the Footsie, one of the drivers for the Footsie is that the inflation bite for the UK appears to be more prevalent than anywhere else, because even I mean, we've got the problems of supply chains just like everywhere else in the world has got, but we've also got Brexit, which is adding another layer of inflation and another layer of supply chain bottlenecks, and subsequently. The Bank of England's Governor Bailey has expressed concern, you know, and just when you think that they are going to follow the US and kind of and stay and keep it cool and keep it chilled, they break cover and kind of come out and you know, express some panic, and that's really what's happened with the Footsie. The Footsie is reacting to the fact that interest rates could rise very soon, as soon as December. Governor Bailey continues to come out and say that it needs to get under control, and because of the Brexit layer, it probably won't get under control in the same way that a lot of other nations can just about make the argument that the transitory nature will eventually unfold because supply chains and bottlenecks will start to get released. But with Brexit, it's different because, you know, you've got this kind of border issue. You've got this labour issue over here as well with unemployment numbers. Certain jobs aren't getting filled because the Europeans aren't here anymore. And British people, whether they're lazy, whatever it is, they're not doing the jobs, which means that you're then going to need wage inflation to attract some of those people into the jobs that they just don't want to do. So nurses, there's a shortage of drivers.
Same here.
Well, this is the thing. So the shortage of drivers is one of the big forces that is driving inflation higher. And again, you know, what do you do? I've got a friend who's a driver. He's already had a pay rise and a pretty seismic one too. So they may well have to stay on that trajectory and continue to rise wages. And if that happens, that also then starts to make countries very comfortable about raising interest rates. The Bank of England has kind of come out, as I say, and break cover, and that's drawn the Footsie down. What has it done to the pound? Well, we did see a spike in the pound initially here and here.
Mate, before you go on, I didn't give anybody I didn't give the people in the room the levels for the dollar Sing trade. If you want to follow it, I'm selling it at 1.3545. The stop loss is at 1.3605, and my first take profit is at 1.3515.
Okay.
Sorry about that.
Chart settlement, is it on an hourly or half an hour?
That'll be on a daily chart.
Daily chart. So you're selling it?
Yep.
At 13545.
Yep.
This is around about there. Yeah. It stops.
Stop 136.05.
So stops at the higher bar there. Yeah.
TP1 is at 135.15.
Somewhere around about there. Okay, so everybody can see that visually. Looks pretty sensible. Nice horizontal level along there. That would be a sensible place to take profit, wouldn't it?
That's what I figure.
Yeah. So, well, in actual fact, so then let's talk about the dollar. So we've had that coming out from the UK. We've had the numbers we've got to follow, but we've got to more closely follow the rhetoric. And this is the interesting thing about when you're following data, because the data will tell you when there is an inflationary environment that the purchasing power of a currency is losing value. So this is where we sort of like say, if CPI numbers are high, actually it's quite bearish. It's bearish for a currency, unless the people behind the scenes are talking about specific numbers they need to see to raise interest rates or to start tapering. And that's what we've got. That's the environment we're in right now. So we're sort of flipping a little bit. We're flipping our reading of the numbers, and particularly flipping it when we get specific governors come out. So the governor of the Bank of England has come out. So that means that every number which is now going to be hot is going to push the pound higher potentially. That's the way we should be reading it now. Every number that's hot, we should be looking to push the pound higher. It's not the same for every single currency. So, but let's have a look at the dollar. So this week, what's been driving the US market? We got nothing on Monday. Retail sales. Look at this massive jump in retail sales, core retail sales. But I think one of the significant numbers here, which is a yellow folder, is this import prices. 1.2% from 0.4%. That's an inflation number, and it's a massive inflation number. So we've had retail sales jumping nearly 1%. We've had import prices jumping nearly 1%. So it's almost, and this retail sales number was a bit odd. And the reason it was a bit odd is if you remember last week, we had on Friday, we had this preliminary University of Michigan's Consumer Sentiment Index, which was really weak. So we had a consumer saying, we are not comfortable. We're not confident here. And then the following week, we get this jump of 1%. Now, what may have happened? I mean, there's a few connotations, and there's
were the time frames the same?
No, well, no. So this is the interesting thing. So the University of Michigan Sentiment, interestingly, is forward. It's a forward thinking. It's a forward reported number, if you like. It's telling you what's going to come. Retail sales is telling you what's been. And what that suggests to me is that consumers aren't comfortable here, and what they've potentially done is bought a lot of their items for Christmas early. They've maybe looked for the bargains early. So the next retail sales number will be really interesting. The next one and the one after that will be really interesting. Do we see a reduction? Does that consumer sentiment index actually, does it work? I mean, it's only an index, so it's only going to be a basket of people. And
who do they ask? What demographic are they asking? Yeah, there's all sorts of connotations, isn't there?
It will be exactly, but I think it will be certainly a refined index, and it'll be pretty good. It'll be pretty close to what's going to happen, but that's what we saw anyway. And import prices again going up. So import prices are saying to us that the consumers got every right to be nervous, because if import prices are higher, what's going to happen? It's going to get passed on to the consumer. Then we've had a load of federal bankers come out, and some of them have said that they are pretty concerned and interest rates should be raised again. Wednesday was the trigger day for the UK, as I say. Governor Bailey was out earlier in the week saying he's worried. Then we get CPI data year on year of 4.2%, and the RPI as well at 6% over 4.9, PPI input and output both raising. So this is saying inflation is not going away, and the suggestion now for the market is the Bank of England will raise interest rates. So that suggests that every pullback now should probably be bought. That's the kind of the overall kind of message here, is that the initial spike is probably near fair value, maybe a little bit higher. So anything that draws back, you're looking to get back to that initial spike, because the anticipation will be that the Bank of England will raise interest rates. So unless they don't, if they come out and say something else, then all bets are off. But if they keep pretty quiet between now and the next rate decision, we'd be looking for further upside with the pound. That's the way I would read that.
Yep.
Now,
my analysis would be the same. I think it's a sell today, but it's a sell to buy, I think.
Yeah, sell to buy would be about right for me, mate, as well. And that will push the Footsie down. Probably it will push the Footsie lower. I mean, the Footsie is bottoming, potentially a near a bottoming out phase. So what we might well see with the Footsie is in between now and the rate decision, we might see the Footsie start to move up again relatively soon. So it's getting close to kind of some of these levels. Does it come and back down to here? It may. It's got a little way to go. Might just be this point here, but it looks like 71.60 is around about the right area. So it could be another near 2% drop in the Footsie before it starts to find some kind of support. And if that happens before the interest rate decision was to come out, then I think buying would probably come into play into this level, and then it might well turn around and go lower for longer. What's been happening in the States is kind of a different message, because they haven't broken cover. We've got these numbers coming out. We've got some of the lesser governors kind of coming saying, something needs to be sorted out here, but they're still remaining quite cool on their rhetoric. We've also got this decision by Biden where he's going to vote on whether he's going to have Brainard or Powell, whether Powell gets another term after his term ends in January or February next year, or is there a new a new Fed governor coming into play, new chairman coming into play after that. So Brainard's between those two, and that probably added a layer of volatility initially, but it's got very quiet. I don't know how long he needs to make this decision, but he's really pondering over this one, whether he should change tack or not. Where I think there's a lot of support for Powell, because he's supposedly done a very good job navigating through the crisis. So there's a lot of support for him, but he's been there a long time. So in chairman terms, he's been there a while. So it might be time for a fresh face, and Brainard may well get the picture, and may well get the job. I don't know whether the fact that she's a female might also promote just a little bit more thinking behind it as well. Maybe not. Difficult to know. But that added a layer of uncertainty, but that seems to have gone away and dissipated somewhat. And also because of the way that the Fed are talking, which is still transitory and still no worries at all, then there's also this situation where the stock market is able to remain flabby, and the dollar is kind of spiking, coming down. We're still a little bit undecided here, but
Gee, there seems to be a lot of there seems to be a lot of pressure at the moment. Inflation pressure is what I'm seeing here. The prices are just out of control. And
yeah, exactly, mate. Well, this is the thing. We got Philly Fed later on, manufacturing index, unemployment claims later on as well. Does it, and what you're looking for with unemployment claims is this to be less, substantially less, because what the Fed have said is that they're waiting for the jobs data to really line up. It's already pretty good, but they want that jobs data to really line up. Now, if the jobs are now starting to increase, then you would definitely expect them to say, okay, look, the consumer can take this, so we're going to get ready. They have announced the taper. Jerome Powell is notorious for being quite slow. I mean, do you perceive it as slow, or do you perceive it as measured? I don't know. But they. I'm not saying they go.
Geriatric or
it's tricky, isn't it? Because it depends on your perspective. And that will play a part anyway on that. Now, when it comes down to Canada, maybe one of the reasons that we've seen the CAD weaken is that CPI month over month was a jump. Year on year, it stayed stationary. 1.8% stayed in line, as has the median year on year as well. The trim level was in line. So those numbers, when you sort of compare that to what we just looked at with the UK, suggests that Canada hasn't got anywhere near the same issues of inflation that the UK's got. And as I say, every single country will be different because they will have different suppliers, they will have different needs. And with the UK, Brexit is a layer. So the pound may weaken because we're in trouble, not because we're doing really well. And you can see that, as I say, the Canada don't seem to be anywhere near as problematic. And some of that might be because energy costs may not be as high in Canada as one of the major oil producers. So that's what we're looking at, mate. And in inventories from the UK, from the US, when it comes to oil shrinking down a little bit, and also what we've had, just to get onto the oil story a little bit, what we've had is some of the minor producers come out and say that that they are increasing the supply. So OPEC would have to reduce supply to keep the number the same. So right now, actually, we've got more supply of WTI into the market. And this is another thing which is probably driving the Footsie lower when you consider you've got Royal Dutch Shell that is about to change its name, and BP as two of the major players in the Footsie that do actually make up a huge part of the index. WTI comes down, the Footsie's going to suffer. You add the pound layer on top of that, that would suggest lower for a little bit longer with that. And I'll finish up with gold and just have a quick look at these charts, because gold obviously is probably now, it's about to enter a seasonal period where the bulls come into play, and it's now broken through this significant level here, and gold looks to me like it might well be on its way now, and the same with silver as well. I think silver's also on its way to the upside.
Ainsley been shortly, of course, to add her opinion to that.
Yeah. Actually, let's finish with Bitcoin, mate. Let's finish with Bitcoin, because Bitcoin down near, what was it at? It was near 70,000. It's now down to just under 60,000. So it's down near 13% or something like that. On Bitcoin.
A mere speck on the radar.
Yeah, well, it is for this, isn't it? But 13% within a couple of weeks. Maybe a little bit worse than that. What happens from? They're
starting to talk it down, I've got to say. I just read the headlines when they flash across the screen. Everyone seems to be talking it down at the moment. Yeah,
well, they will, because it's weakening. That's the way that they.
That's right. That's the way they operate.
Yeah, they run their media outlets like that, don't they? Something's weakening, let's talk it down, get people in that see the same thing. When things are going well, we'll get somebody in that talks it up. So yeah, I mean, the cryptocurrency market on the whole has weakened. We've seen Bitcoin come down. We've seen Ethereum also under pressure here. I don't think it's anything particularly sinister, but I think there's some implication with tax that kind of came out and has spooked the market a little bit. Couple that in with some dollar strength, and we see some of these currencies do come down, and I think because of because of the dollar strength and because we've seen these ones come down, this is where gold becomes even more interesting, because this didn't weaken. You know, this is even stronger than that. The US 10-year bond yield shot up to 1.6 and north of that, you know, went way beyond that, 1.65 or something like that. And yet gold still managed to hold firm. That's pretty bullish for gold. You'd have to say that there's some pretty good indication for what's going to go on with gold.
How strong is it? It's in a bit of a range that I've got it at the moment.
Yeah, I mean, I think if you're looking on the longer term
chart.
timeframes, you know, on the weekly, on the dailies, you know, that it looks, yes, it's in this range up here, but that looks like a bull flag up here, and it looks like it could take off again. I think the point really with gold is that the fundamentals with gold have been there for quite some time and yet not reacted to. Now they seem to be reacting, you know, they seem to be reacting to the fundamentals with gold, and now ignoring the potential fundamentals that could change the thing, like a spike in the bond yield, is ignoring that. S&P and the Nasdaq continue to flirt with these all-time highs, mate, as well, which I think this is the big thing, really. You know, how far is this going to go? Because when I look at the S&P and the Nasdaq, they look worryingly elevated. You know, it's a concern, you know, where there's very little foundation for this particular run here. A little bit here, but it didn't really pull back that far. So I think these are worryingly elevated, and there are points out there that the greed index is, you know, it's so high. Greed has well overtaken the fear aspect, and we're still seeing the VIX quite high as well. You know, the VIX took off last week, at the end of last week, and it's just caught in this little range here. What now happens to the VIX? Because if the VIX takes off, then we're going to see the S&P and the Nasdaq plummet. Elon Musk continues to sell Tesla shares back into the market, and earnings have been good, but earnings season's about to end, and then they're going to be looking at the next one. You know, so I don't know how long this goes. Again, seasonally pretty good for equity, so it could go on for some time. Yeah, it might even go on into next year. But I think when the market is going to come down, it might well come down pretty hard for a lot of people.
That chart's telling me it's going up.
Well, this is the VIX, yeah. So this is the VIX, and if that goes up, what tends to happen is the S&P will come down. And as I say, it looks pretty, you know, that the foundations don't look like they've been put in place for the S&P. Very, very spiky run to the upside. You look at that on the weeklies. No red at all so far on the weeklies. Last week's bar was suggesting a bit of indecision up here, not quite sure what to do. What are they waiting for? And it might be that they're waiting for Jerome Powell to announce, for Biden to announce who the next Fed chair is going to be. I don't know. But the news and data, positive news and data for the S&P, I wonder whether that's now done and we're now waiting for the next one, which could leave us in a range. But do we explode again to the upside? I have my doubts.
Well, a good exercise is to count how many weeks you've got there and see how many times in recent history that has happened without a pullback.
Well, this is the
and
7th.
Looking at that, yeah, I can see about 2 occasions where that's happened.
Yeah. I mean, you know, there are obviously measured moves you could take from that, but this is what I'm looking at. You know, I've got this channel for the S&P, which would suggest to me that that at some point this is dropping, and I don't know where. Maybe it's in there. That would suggest we're at the upper end of the channel, so there could be a little bit further to go. And actually, different opinions over in the States for the S&P as well. I think JP Morgan are saying S&P down to 4,400 by 2022. And I think Goldman Sachs are saying 5,000. So there are sort of, you know, different ideas of where the S&P is going. But I've not
Well,
heard one of the
there always
major
are,
bankers.
mind you. There's
Yeah,
nothing
I
new.
haven't heard one of the major bankers come out and say down for a while. You know, they seem to be sort of like maybe changing their tone a little bit. But yeah, it's very, very difficult. Lewis has heard a rumor that this 15th of December is something affecting crypto. Maybe there is. You know, I'm not up with that particular thing. I mean, there's so much research to do on everything that I will catch up with cryptos properly soon. But you know, right now I'm just getting whispers of what's happening. But elevated again. You know, crypto market elevated again. This you don't need to bring up an indicator to tell you that this is overbought up here. You know, that overbought. Look at that. Look at that on the monthly, mate. I mean, forgetting the shorter term time frames. That's an astonishing chart, really.
It's ridiculous.
Yeah. You know, valuations are bloated, and you know, this is the whole argument is that where do people put their money right now? And they're still going towards the S&P, but they will change. And this is what's happened in the UK. They will change that and maybe move it back to cash if the Bank of England give them some return on their cash.
That's right. They've got to have a carrot.
They've got to have a carrot. Yeah, yeah. You know, they're not buying bonds. With the bond yield spiking, they're not buying bonds. You know, bonds aren't going up. You know, so the money seems to be going through into the S&P. I think the big concern for the regulators in the States are the types of people that are in up here. Because one thing I will bring is look at this. Look at this volume here. Let's do it on the daily. Look at what's been happening. You know, this area here. You know, there was already sort of like a move down. Look at this spike here, red bar. Look at this red bar. The next spike. Now look what's happened to the volume. It's starting to dissipate. It's starting to shrink down. I noticed the same with the Nasdaq as well. You know, big spike on the red bar here. And up here, let me get rid of that. This one here and this one here, and then just a move down, a move lower with the volume. And this was this is the most recent spike here. And look at the bar. I mean, you probably can't see it that well on that, but this is a reversal bar here, or you know, traditionally same sort of thing as this, right? Very similar looking. So that's the one concern that the regulators and the US government must be having is that who are they up here? Who's buying the market up here? And this suggests it's more retail than institutions.
Well, I mean, that makes sense. But what? Yeah, I was about to say the great unwashed, but I shouldn't say that because the truth is, if they've been unwashed for the last 10 years, they're going okay.
Well, this is true.
You can just keep buying the highs and you'll still win.
You still win, yeah. I mean, this is one of those things that you sort of look at it and think and wonder whether actually it's just new participants into the stock market that have seen, you know, that their shares go up and up and up, and they continue to sort of like get involved up here because it is the kind of shoe shine boy scenario. It feels like that at the minute. The only, you know, it's difficult to say that with any real confidence because the earnings season has been pretty stellar. But there are now, I think, forces that could push this ship in the opposite direction, you know, particularly the Fed. And this is where you wonder whether those unsophisticated retail traders get caught with their pants down because they don't understand that stuff and they continue to buy. When the market tanks, they don't know why.
Must happen. Just when?
Yeah,
don't ask me.
It will happen. You're absolutely right, mate. Well, this is the interesting point, and I think it was a JP Morgan representative. I might be wrong, but it's a major banker from the US said the fear and greed index is so tilted in the way of greed, and in his all his years of investing, experience tells him it doesn't last long, and you know these kind of warnings are starting to come forward. And as I say, this might take us. How long's long? Who knows? You know, does that mean a month, 2 months? We don't know, but It would suggest that January sometime next year, this is when we might start to see some real blood on the streets with the equities.
Yeah, look, greed's pretty much, if you convert the what do they call that thing? Subprime mortgage. If you convert that into a sentiment, it's greed, because they just wanted to dish out more so they can make more, dish out more so they can make, regardless of the consequences. And that's precisely the environment where you're going to have trouble.
Yeah.
Because it is out of control.
Yeah.
And that's what we found in the GFC, of course.
Yeah.
So using the same guideline in a completely different environment, if you like, although maybe they're getting back to those crazy days of lending people money that they shouldn't be, but I don't know that that's a fact. But using the same guidelines, I think you can sit back and expect something, maybe not as dramatic to happen, but something will happen. It's just a matter of
when. I think that there are certain parts of the world that are concerned. I mean, I know the New Zealand central bank are a bit worried about the housing market over there, because I think there are some indications that there will be some people under significant stress if those interest rates have to hike up too much.
Totally.
Other banks aren't saying quite the same thing, but then their interest rates are still low. I still wonder whether New Zealand moved a bit early. Looking into it, their numbers have been a little bit tepid since they raised interest rates.
Yeah, I think they'll fall into the right decision. It'll become the right decision.
It'll become the right decision
by default. It won't be their fault. it'll just happen.
Service sector's terrible, though, really. I mean, the manufacturing numbers seem pretty good, but the service sector's awful. And we're not getting the travel. Still there's travel. There's massive problems over here with travel, huge problems. The amount I had to pay to get all these tests done when I got back, and quarantining and all sorts of things. So there are nations now in the European Union that are locking down the unvaccinated. I'm not sure whether they get away with that in this country, but that's pretty significant. To sort of say to people, you can't go to work because you're not vaccinated. I mean, we're talking about can they force people to do it? Well, this is the way they do it through the back door, isn't it? They say, okay, you don't have to get vaccinated, you can't go to work.
That's such a hot potato, that one. It really is. Mandating vaccination, it's such a hot topic.
Yeah.
Some people will say that's their human right to refuse. Other people would say it's my human right to not work with you because you're not vaccinated.
Yeah, as you say,
I
mate.
get both arguments.
Yeah, this is a problem, isn't it? I mean, it is a hot potato, and in a way, I think you're probably similar to me, where we don't really have an opinion about the vaccine. We will just do what seems the most sensible out of the two to give ourselves our own freedom and whatever else, because we're not scientists. We don't know whether it's good or good or bad.
You've got to listen to them.
But exactly, and the numbers suggest that it is providing some protection. So after a while, you say, well, if I'm out in society, then I'm going to need to get it. Simple as that. I'm going to need to get vaccinated. But as you say, people that don't want to be vaccinated totally understand their position too, because they feel healthy and they don't feel like they want something pushed in their body that they've not requested.
The thing is, it's really not about the individual. It's the responsibility that the individual has to other people, family, community, friends, all those sorts of things that have to be taken into consideration. So, if I was single and footloose and fancy free and had no responsibilities and no people relying on me, then okay, I'd probably be a conscientious objector. I'll put it that way.
That's true. That's true. But
that's not the fact.
No, but that only really works if you trust what you're being told. And that's the thing, isn't it? People don't trust what they're being told, and that's why they don't want it. if they trusted what they were being told about it, everybody would probably get it. But I think there's a lot of and whether you think they're conspiracy theories or not is another hot potato, another question. But I think that there is this movement that that people believe the media is controlled by powers that want you to do certain things, and they force you into a certain way. And that's why I think that these people aren't necessarily trying to be anarchic, and they're not trying to sort of like refuse things for what they don't believe is good reason. I think they think it's good reason that they don't want the state control. Now, I'm not saying that's me. I'm just saying that that's what that's the way I understand their viewpoint.
Yeah,
and again, who would be a politician, eh? I mean, it's just it's one of those things that you just can't really sort of like sit on the right side, sit on the right side and say you're wrong, because you've got to sort of say to you've got to understand people's perspective and point of view. You can only do ultimately, and back to the individual, really, you can only do what you individually believe is the right course, because nobody really knows.
No, and like I said, there will be people talking about this for a long, long time, I should imagine. What's the market sentiment? Have we got anything to trade?
I don't think so, mate. I mean, the Footsie needs to bottom out. I wonder whether it's going to be a bit of a quieter session. There's a lot of movement that's taken place. We've been through some of these charts, and Nasdaq's at a high. Would you want to trade it here long? Probably not. Do you want to short it already? Nah, not really. There's some intraday opportunities. Oil, I think is interesting, because the way I see oil is smaller players are coming in to increase the supply. However, OPEC have still hold the cards, and they haven't yet shown their hand. So I would see oil in a range. I don't think oil's going to be turning sort of like down. So I would go with for a long. I think this would be valid if it starts to kind of like create something down here. Silver and gold I like, but they may well need more of a pullback. Maybe not so much as silver. Silver looks pretty good for some further upside. Gold might need to pull back. I think if we were looking at the trade of the day, we probably both settle on the pound, sell to go long. Short to go long. Yeah. I like that. I think that's a good trade.
Oh, it has come off a little bit too. Just having a look at it. Similar, and when you're done with the charts, I'll have a quick look at the euro as well.
Yeah, let's have a look at the euro, because the euros, that is another one that should be put into the mix, because Christine Lagarde is not moving. She's dug her heels in deep. There's no fluff with her. This is getting worrying. She's dug her heels in, and she's a short woman, but she's when she walks around, she's like 6'5" because her heels are so big.
Fair enough.
She's only 5'2".
All right, she is not, is she?
No, she's tall.
She looks bloody tall to me.
She is. It's the heels, mate. She's digging them in now.
It's all the heels that she digs in. Yeah, I get it. Two ways to look at this chart from my point of view. I've now been taken out. My trailing stop has been hit by a freckle by the look of it, but that's the way it goes, and I'm not the least bit disappointed, because I think if it does go short, we'll get another opportunity to trade it again. Now, as I said, I think there's two ways to look at this chart. One is that this is potentially a bear flag, so we're looking to trade it off the top of that through the bottom and onto more downside. The level we are currently sitting at, however, is probably not going to offer us too much in the near term. If we do come below here, I think it's only going to be in this little vicinity here. We are also at a massive all-time level, which is 113.60, and I'm sure those of you who have been around for a while listening to me will have heard me mention that number 113.60 many times. And the reason it is so substantial is not just because it's clearly a horizontal level, but the timing of it. Like we went into Brexit around about this area here. After, I can't remember, that might have been the rumor of Brexit that sunk it. Then it went into a big range before finally emerging out of that area in 2000 or early 2017. We've now come back underneath it. You can see we hung around that level again for a long, long time through 2018 and 19, got below it, back above it. Now we're retesting it. I cannot see, frankly, this going through that in a hurry. So I reckon we're in for some consolidation on euro dollar for a little bit of time. But then I can totally see this level as well, about there. So I'm talking 108s for euro dollar, maybe into January, February before we get there. But that's kind of what I'm seeing. And you'll remember, guys, from this chart, those of you who've been hanging around for a while, that we called this short way back when we got this false break, which set up on the monthly chart, that bar there. And we said we should trade that bar. I didn't. It took 1, 2, 3, 4 months to trigger. And now we're into the 4th month of it actually being what we saw in the first place. So those false breaks on monthly charts are just as good as they are on anything else.
You're in this trade, aren't you, mate?
I'm out now.
Oh, you're out now. You just got taken out.
Yep.
Yeah, brilliant trade though. 12 to 1, right?
Yeah, about 11.75 to 1. Yeah, pretty cool.
12 to 1 will do.
Yeah, that'll do.
Very nice, mate. Very nice.
So yes, I think we're going into consolidation on euro dollar. I think we'll hang around here for a little bit before it decides whether it's going to bounce back or go through. My humble opinion is that we will see it break through to here, but then that's where we go into range. Exactly the same as what happened.
Did you enjoy that trade, mate? Because that's a very different time frame than when we first met.
The monthly?
Yeah.
Well, I actually do enjoy. Pardon?
Did you enjoy holding it, or was it sort of like, or did you always get the itch?
No.
I think making the transition from short term to long term is it's difficult for people if you don't trade that way. You know, if that's not your person, maybe you are more of a long term polar bear.
It's purely circumstantial, mate. You know, it's purely about the business.
Yeah, but you know.
And I'm not in this trade. I was never in this trade, this monthly trade. The monthly trade that I am in and still am in is this one, where I traded this bar here. And that now is what, 400 pips. We're now close enough to 3 to 1 on that one. Now I expect that, this is Euro Cad, I expect that over time to test this level, maybe even a bit lower, maybe there. So 137, so another 500 pips away. And that's what I'm looking at. But I did say Christmas time we'd still be in this. It looks very much like that will be the case. So I'm more than happy with the what are they called? Monthly time frames. But euro dollar, I was in on an hourly chart. You know, conversely, I entered this one. Actually, I'll blow it up a bit to show you why. This was pretty easy to take, I've got to say. And I just happened to be in front of the charts at the right time, because normally I'm not at the moment when I'm doing hourly, when I'm doing my reports or my previews. I was sitting in front of the charts at that time and saw this bar, and that's a slingshot trade for me. It's called a dominator trade. So when I see that on the back of, this is the monthly pivot sitting here, double top, back under the monthly pivot, back under it again, break a trend line, that's a go zone. So
yeah,
that was pretty easy to take. Actually, it could have been a whole lot better if I'd changed my stop, because this is also a slingshot trade.
Yeah,
break and retest with a green bodied bar. Had I traded that bar, that's a 10 pip bar. 10 pips to get, what was it, 250 or something, 235. Wow, you'd be pretty happy if that was the case.
Beautiful.
Anyway, that's yesterday. It's not today. Dollar Sing I've spoken about. Look, I best, because there are a few people that haven't been in the room before, I believe. Hello, Titan Ian. How are you? Good to see you in. If you do follow this trade, the way I trade it is at TP1, which is here, I'll take a half of my risk off the table. So in other words, I'll bank 50% and I'll move my stop loss 30 pips above entry. So therefore, that's a free trade as soon as you hit TP1. TP2, I will decide on the run pretty much, but I don't think I'd be trading through the pivots. Oh, where's TP1? TP1, 30 pips. I've got those covered with my TP1. So I'd be looking at probably down here for a TP2, or if there's a strong horizontal level, which there appears to be about there. So it may be one and the same thing. So I'd be looking to take TP2 there. TP2's automatic stops to entry. If I feel that this can go through there, then I would probably just do that. If I didn't, and I probably don't, because I think this has got a little bit more in it, this consolidation area, I would then take another 50% off on what was left. So that's probably what I would do at that point. Now, there were a few today that I thought were worthy of our attention. Aussie Cad was one. And the reason Aussie Cad's one is because we do have we've got a range in here, right? The only question mark I had, range could be anywhere here, but let's tighten it up and call it there to there or thereabouts. The only question mark I had was, have we actually hit the bottom? So here, how I range trade is exactly this. If I get a double bottom and two double bottoms and two double tops, I call that a range beginning, and I'm then looking thereafter for trading to the high side, off the high side down to the bottom side. So I'm looking for a higher low off the bottom, which we got here, enter there, trade it to the top, looking for a lower high. You got it here. You would have to have it on a smaller time frame, of course, to actually get into that, because you wouldn't trade that bar. And now we've hit the bottom again, or have we? That's the question. And the answer is yet to be proven. But if that is the bottom, then this is a higher low, and it is a game changer bar. Barely, but it is. Game changer bar, for those of you who know, is a bar whose low is lower than the previous, and who closes, or which closes, on or near its high. That's a bit of a question mark, and to be fair, it's probably a bit of a stretch, but the candle's good. It is a red-bodied bar, so that's the reason I didn't take it, was because I was unsure that this was the bottom. But if I now see a close above this high, or the high of that bar, and a pullback to it, then I think that would be a good trade to take on Aussie Cad. There were a whole lot of game changer bars today. Cad Swiss was one. A bit of a long bar, a bit of a big bar to trade, to be fair. But again, you do have a double. You've got three little Indians sitting there, actually. There was no range to break, so no guide on that one. But we are getting now a bounce off this range here, and we're bouncing off the top of it. So I wouldn't be taking that trade. If you did, you'd want to be taking profit before the bottom of the range. Cad Yen was another. Again, couldn't trade that because you're entering straight into a support level. Support level for me is, of course, that channel, the bottom of the channel. Not interested now. I'd be looking for higher lows to trade it back to the top on smaller time frames. That, of course, is a daily chart. Euro Cad, my old mate, is now back at resistance, having broken clear of that range that we'd been in since, 11th of October, 10th or 11th of October. Now we're at November. We're retesting that level. I would again be looking for potential entries short until we got back above or back into that range. If we got back into that range, I would then be looking on smaller time frames to pick up a higher low and trade it to the top, exactly as I do every single day of the week. Well, that's what I look for anyway. Euro dollar, I thought today had a big game changer bar, and that's the one that, of course, has taken my trading stop. Inconclusive here for mine. Yes, we do have a game changer bar. Well, on the daily, this is the 4 hour I'm looking at. What I don't have, and I'll go back to my smaller time frame, what I don't have yet is a daily pivot test. Now, I don't think this currency pair can reverse at this point unless something dramatic happens to the US dollar, and I don't see that in the wings, but anything can happen at any time, of course. The second way I said to look at this is that if this candle on an hourly chart happened to be bearish and decisive, we actually do have a slingshot setup there. I'll call that, I won't call it a game changer bar, but I will call it a low test bar. Into range, broke the top of the range, back into the range, but broke it again. And this trade line here suggests to me that this can indeed break out. Wouldn't want to be trading it too far, though, I've got to say. Maybe at best back to the 114 area, but yeah, I can't see this going long anytime soon. So I'm waiting for this to tell me, frankly, what's going to happen next. If I see on a 30-minute chart, this candle close above the trend line, it would suggest to me that this can go long. If it closes below, I'm in a holding position, because what I like to see when I've got a break, I like to see two candles open and close above that trend line, then come back underneath it, because that's giving the market time to actually decide what happens next, rather than emotive moves, which are probably retail people getting in and out of the market. So I don't want to see that. I want to see a bit of consolidation, then back under, then retest, then I can trade it to the daily pivot, because I think that is probably the better way to look at this today. Look at it from a false break of resistance point of view, and that would be the resistance that I'm talking about. So back under, this one closes up here, I'd be happy. Then back underneath with the next one or subsequent ones, then retest it, then go short, targeting the daily pivot. Not really keen on too much more, except for the dollar pairs. And you know I hate trading them, but they were telling me something today, and that something was on, what's this one? Swissy, dollar Swissy, again at a resistance level, or are we? Is this the confluence area that we're looking for? Probably is. Are we there is the question mark. You can see again that we're starting to tighten up here into this wedge, but there's still room on a smaller time frame. That's a weekly chart, of course. There's still room on a smaller time frame to trade off the top of that. I'd much prefer to have seen it up here, then come back underneath, exactly as I've just described on the euro, and then I could trade it short. But I think on the back of this reversal bar, if I got a lower high in here somewhere, I would still look to trade it short. Dollar yen is not dissimilar. Broke out of this bull flag, but the question mark from me is that a false break not only of the trend line or top of my channel or flag, call it what you want, or is this now going to take off again? Can't tell yet. But if price got back underneath here and closed underneath here now, anytime now, this is a daily chart. So I'm talking today, tomorrow, Monday, be the shortest time I could trade that. But on a smaller time frame, I may already have what I'm looking for. And if I use, that's the daily trend line. If I were to use the 4-hour trend line, and I'll just get that back where it belongs. That's giving me exactly what I need to see. It's taken a long time though. What I need to see is exactly as I've just described on the euro versus the dollar. And what other one I was looking at, can't remember what it was. Up, consolidate, back underneath, retest. Problem is it's taken too long and the market's gone into indecision. So you've got low test, high test, low test, doesn't know what it wants to do. There would normally for me be an entry underneath that bar if it were not for these two. It's probably still there, but the risk factor has magnified substantially because we've got this indecision there. So I'm not doing that one. Rather, I chose dollar Sing for exactly the reason that I've just described. That doesn't exist on dollar Sing. What does exist is the big resistance area. If it goes through it, then you can just cancel the order, no problem. If it doesn't, then I think the sellers will come back in here and it'll drive it down to at least this trend line where we will have been well in profit at that point. So that's kind of where I'm at, mate. Dollar retracement, I think, rather than reversal. Yeah. But they're tradable. So I'm happy to stick with that.
Yeah. Okay, mate, good stuff. Well, we probably well over time.
My goodness. How did that happen?
Sorry, John.
Sorry, John. It's time for QM.
It is time for QM. I think
what did I call you last week? Jocular John or something?
Oh no, it was oh no, what's it was Gorgeous George and I
think that might not
Affable Ash, Geriatric Jeff. Who are you, John? Apart from
I don't know.
TM.
I can't remember.
Jovial?
I wasn't feeling too jovial, that's for sure.
I'll have to watch the replay. Let's go. We've kept you out of bed too long.
Hey, no, it's cool. No problem at all. It's all good in the rock and roll jungle. This week's quiz, I said it last time. I think it's easy.
Oh, I like a nice easy one.
Bang. Yeah. Okay. Rock on. Everybody should be getting full marks. Which major economy's infrastructure has just been hit by a major storm?
Oh, was this?
It probably won't roll through for a bit, but might affect the oil price.
Oh, sorry, Joe. I've just texted Lewis.
Is this the news?
It is.
Oh, my answer was Canada, but I've just texted Lewis.
I don't know.
There's a chat bubble.
Hold on, let me see if I can text you.
What happened in Canada?
Everyone.
British Columbia got a storm, knocked out a major highway.
There we go.
Oh, okay. Canada. There you go. So I've been on the road, see. That's my excuse.
Yeah, they've got a bit of this going
on. Cheers, Titan Ian. Yeah, look, we're a little bit different to most scribes. You'll find that if you hang around for a while. But generally, we make some dough, so that's what it's all about.
Which famous USA sports stadium is getting a new name? It is crypto related.
Oh, I heard about this.
I think it's quite cool.
Remember.
There's 4 teams playing one stadium.
Oh, I'd have to say
it's a baseball team, isn't it?
The most obvious for me is.
I can't remember who it is.
No.
No.
The only reason I know about this one is I have been there. Yes.
Are the Lakers a baseball team?
There's four teams in one place. I thought somebody in Singapore might get it because Crypto.com have cut the deal.
I knew it was LA, which okay.
20-year deal. So it looks like cryptocurrency is, it's not going away.
It's here to stay. Yeah, that does suggest that, doesn't it? And also Amazon now, deciding to ban Visa. It's suggesting also that cryptos may well be used to pay for your Amazon items pretty soon.
I'm not impressed with that.
I bet you're not, mate. I bet you're not. I think there's a lot of people that aren't very impressed with that at all. I mean, it's just, again, just kind of pushing their weight around, isn't it?
Yeah, my bank account's with Barclays, so,
Yeah.
Luckily, can still do the debit. Talking about staff, people not wanting to do jobs anymore, what might be a solution to staff shortages? Hint, it is the tech question of the week. I thought this was great, but I'm not quite sure I'm quite ready for it. Yes. Robots to serve your grog.
Robots to serve your grog, really?
Thank God. Oh no.
There's some part of this is that they reckon that it could be up to 100 drinks an hour.
Wow.
Robots can walk out. So it's not a. I thought it was quite a good one.
I'll be asleep pretty quick.
This one is a bit. It's out of the news a little bit, obviously, with the coronavirus thing taking center stage, which is one thing or the other. Which virus has produced another case of the body getting rid of it without the use of drugs? There's only been 2 reported cases, and this particular virus has been around quite a while back. Got big in the 80s.
Big in the 80s. I'm going to go with that.
Yeah, that's when it sort of had H-I-V.
Oh, really?
This I've been research. I've been a little bit of a geek all day. This really did pique my interest. This is the second recorded case.
Wow.
I'll take a point.
There was the conversation before. Are you going to take the vaccine or are you not going to take the vaccine? Stories like this then tend to sort of
but then there's 2 cases out of a few million, right?
Yeah. I was gonna, but quite a fascinating. This is a classic. Whose tweets have landed him and his company in court?
We know that is. Oh no, maybe we don't. I
think you do. You are correct.
Yeah, he's always got it. He's the new Donald Trump, isn't he?
Yeah, but JP Morgan have got him in court.
That's right.
For
some sort of auctions thing, isn't it?
Yeah, at me. This should be. Which major currency's inflation rate just hit a 10-year high? Yeah, that's right there. See, I told you to get the match.
Yeah, I'm enjoying this one. Good quiz.
You're too quick, mate.
Yeah. I need this to be got under control, or I can't visit in the summer.
Oh, do you know? Yeah, it's problematic travel right now, John. I've jumped through hoops just to kind of get home.
Helen, my wife wants to go back and visit a mom who's in the care assisted home just before Christmas, and actually getting out of Malaysia to fly is fairly straightforward. It's what happens on the return journey. Getting into the UK.
That swimming's a bugger, isn't
it? This should be an easy one. Which are the 3 largest economies by GDP?
Is that
Jeff's on the money?
Now, can I remember the third? Jeff it is that, is it? Okay. All right. I'm going to put what I was going to put. I know it's wrong because you said Jeff's on the money, but I'm going to put that because it's right and fair that I don't copy Jeff.
Looking at the chart, this might suggest why the UK might be in a bit of trouble in the top 10 economies of the world by GDP. Germany and France are sandwiching in the UK. I'm amazed that Italy's in there. I haven't been there on holiday. I'm amazed that that's there.
But look how they're dwarfed. Look how Italy's dwarfed by the United States by 10, by a factor of 10. So there's a big jump down from China to Japan, and then it's and then another jump from Germany to the UK, and then it gets a bit tight, doesn't it?
Yeah.
I'm surprised. Oh, India have really suffered, haven't they, recently? India will pop back up there as well at some point.
Oh yeah, I'm looking forward to it. And a real easy musical one to finish. No, bang.
Oh, that's oh gosh, who's...
Okay, you got we call them Americans. I'm sure they're all ex-presidents, but one of them plays the saxophone, and as a kid, also his head of the Federal Reserve also actually played saxophone as well. Obama is only been known to be a singer. So one of these presidents.
Then in that case, it's got to be Clinton.
Is that actually? Yeah, I would say Clinton also.
And his yes, you're correct. And he's
you can't imagine.
He's pretty.
You
good.
Can't imagine George W. ever have the intelligence to learn musical instruments.
Groove.
No.
Greenspan played saxophone as well.
Oh right.
Yeah, it's just too much.
They used to jam together, did they?
No. Greenspan had lessons with somebody called Stan Getz at the same time, and Stan Getz went on to be a major player on the saxophone. And Greenspan realised that he was never going to be any good, so he ended his saxophone playing days.
Oh,
which is a bit of a shame. There we are. I said it was quick, and
that was quick. Well done, mate. Thanks for making it quick.
Hey, no, it was a pleasure. I felt like after last week's multi-part question time was probably not a good idea.
Brain teasers.
not a good role.
All good. How's your week been, Jono? Trading wise,
it's good. I was in on the pound New Zealand trade to go long, so I banked some profit.
Well done.
Waiting for the pullback. The other trades, so not great, but I'm just playing the long-term game. Yeah,
I'm wondering if it's a bit of a tricky period right now, as the market does that kind of irrational, hyper irrationality, in some respects. You can definitely hop onto a few things, but it feels like there's a lot of rug pulls going on. I was not expecting Governor Bailey to come out and say what he said, but he just came out of nowhere and said, the fact that interest rates are likely to go up, and it's changed the parameters again. So it feels like that at the minute, where there's just a little bit of concern, on the major economies and with the major players. There's just that little bit of concern where they feel they've got to come out and make statements.
Yeah.
Why has the Aussie come off so much this week? Whilst I've been away.
I think it's probably a little bit to do with the fact that other kind of economies have come out and stated things where Australia hasn't, and some of the numbers have been a little bit flatter as well from Australia. They're not quite as good as they have been. I don't think it's a major surprise, to be honest, mate. And I wouldn't see the Australian dollar strengthening a great deal over the course of the next couple of months, unless we get back to some really positive growth. There was some issues in China as well that have probably plagued Australia. I did write about it, but yeah, Chinese numbers haven't been good, have they? Some of the Chinese numbers haven't been good, so I think that probably has played a part as well.
Well, I think it's at a beautiful buying point myself.
Yes, yeah. Well, range would be the way that I'd play it for sure. I wouldn't expect it to break down, that's for sure.
Well, I called it short here off the top of the range,
and
everyone was
everyone was laughing at you.
Really?
I'm just quoting.
Well, it's pretty much true. It's pretty much true. But right now, I see this in a buy zone.
Yeah, I'd agree with that.
So, high low in here. Maybe get up to here, bring back into a higher low. I'll be buying the Aussie versus the dollar.
Yeah, I think it might take a little while to carve that one out, though, mightn't it?
It may well take a while.
Yeah. But if it can, definitely bottom out down here, higher low or double bottom, I suppose would be pretty good, right?
Either one. But I've got to see after the double bottom. I've still got to see a higher low before I'll trade it.
Right.
The best case scenario here would be if it actually broke through there, find this low, got back above it, then retested it. Then I'm really happy to pull the trigger. But still looking for a higher low here to trade it now. I'm more than happy with that. My trade of the week, that's why I asked the question, what happened to the Aussie? I think it's probably just given me a better opportunity to get into it, because I think this is a very, very strong place for this to bounce. It already did. And if you happen to trade it, hopefully you took some profit before it came back. But I see this as a potential higher low again. Don't like the green bar, however. Maybe I can pick it up on a 4-hour chart. But this, this is reeking of sentiment cycle to me. Really is. And that makes this an aversion point.
Yeah. Yeah, very interesting.
So
gonna look at some of these stocks for sentiment cycle. Actually, that might be a poignant thing to be looking at right now.
Can't hurt at all.
Yeah,
but look, I think there's some possibilities. I might have. No, I can't. I was going to say I might have to trade tomorrow, but I can't. Too busy.
Too busy tomorrow, mate. Don't worry. Monday's still around.
Yeah, it might be the wise. It might be the wise day actually. But this may not wait till Monday. This may take off. Don't know why from a fundamental point of view, but the technical level or the charts are telling me it's going. We shall see.
Yeah. Aussie Swiss is that?
That's Aussie Swiss. Yep.
Oh, well, do you know what, mate? I mean, there's quite a lot of haters right now for the Swiss economy.
Is that right?
Yeah, COVID is really sort of like rearing again, and there are certain policies that are kind of coming out from some European countries that aren't going to be conducive to growth, and Switzerland does fall into that camp.
Cool. Won't hurt then. That can't hurt. All right, I'm done, buddy. How about you?
Yeah, I'm done too. Looks like a cup and handle there as well, just to kind of get another potential pattern.
Yep.
Yeah, absolutely done. Thank you to you, mate, for being my buddy of the week for the couple of days this week. Thank you to John as well for your major patience, mate, and bringing such a good quiz this week. Brilliant quiz. And
Ash won the quiz, guys. Ash won the quiz.
That's way long.
And to Angel for looking after us, and James was here on Monday, so thanks to James. I know he's not in, but thank you to him. To all of you guys out there for joining us for the 2 days. We'll see you back on Monday, bright and ready to go. Have a great weekend. Stay safe in the market, and always do your due diligence before you get into trades. I guess we'll see you then.
Yep. Thank you for being our trading buddies, guys. And Lewis, cocktails from a robot. Really? Okay. Have a great weekend, everyone. Bye-bye.